Welcome to LayMab. Today's topic is how to report assets under IFRS. Assets represent the first part of your statement of financial position, and indeed, you can have different kinds of assets there. As this area is indeed extensive, there are many different IFRS standards giving us guidance. This short lesson introduces a few IFRS standards dealing with some non-current assets, inventories and related topics. We do not deal with financial instruments here.
What standards? The standards dealing with assets are IAS 16 Property, Plant and Equipment. IAS 16 deals with the reporting of property, plant and equipment. Those are the assets you use in the production process, for rentals or administrative purposes for more than 1 year, IAS 16.6. IAS 40 Investment Property. IAS 40 is often an omitted standard, but when it comes to the land and buildings, watch out for the purpose of their holding, since unless you hold buildings and land for your own production/administration, then IAS 40 applies. IAS 41 Agriculture. Think of IAS 41 for all your biological assets used in an agricultural activity, with the new exception of bearer plants. IFRS 5 Non-current assets held for sale and discontinued operations. IFRS 5 is here for a very special occasion. As soon as specified conditions are met, i.e. management is committed to a sale, an asset is immediately available for sale, etc., then you can forget about IAS 16 and other standards. Instead, you need to focus on IFRS 5. IAS 38 Intangible Assets. IAS 38 applies to all non-monetary identifiable assets without physical substance, IAS 38.8. IAS 2 Inventories. IAS 2 deals with all current assets used in the principal revenue-generating activity somehow. Sometimes, you even need to apply the standard IAS 2 inventories to the reporting of non-current assets. For example, car dealers report new cars for resale under inventories, and cars for their own use, usually under property, plant and equipment. Therefore, the main criteria for classifying your non-current assets and picking the right IFRS standard is the purpose of holding it.
On top of the standards we mentioned above, there are a few more IFRS standards giving guidance to transactions closely related to assets, such as IAS 23 Borrowing Costs. IAS 23 prescribes the reporting of different borrowing costs attached to the financing of the acquisition of some assets. These costs can arise in different forms. IAS 36 Impairment of Assets. Sometimes, the value of non-current assets goes down and the assets are overstated in the financial statements. To prevent this, the standard IAS 36 deals with the impairment of assets, what it is, how to determine and calculate impairment loss, how to recognize it or reverse it, and other related topics. IAS 20 Accounting for Government Grants and Disclosure of Government Assistance. IAS 20 applies when some assets are acquired with the help of grants from governmental and similar organizations, besides other situations.